Hi there. Thank you for tuning in. If you're joining us today after watching last week's video post, thank you. And if you're coming back here after watching future videos that I'm still about to post and just wanting to see where it all started, welcome back. I just wanted to thank everybody for the encouraging feedback that I've been getting from some industry colleagues. Thank you for that. And just watch out, because at some point I would like to invite people to join me so that we can have like a conversation to make it a little bit more interesting. And hopefully as I get better with these videos, I'll be able to type in some words to give you just some overview and, create some interests and to make it a little bit more engaging. But following on from our video last week, I did promise that we're going to talk about insurance, and I'm going to try and explain it in more basic terms to help the general public understand what arrangement they have within their superannuation. There are three things I want to cover today. Firstly, I want to cover why insurance is an important element of your superannuation arrangement. I also want to cover how it works in general. And of course, I'd like to cover what types of insurance you're able to access within superannuation. But before we get into all of that complexity, I think it's a good idea if we just talk about superannuation just in general and what that's all about. So for most of you, I'm sure you've got a good understanding, and you probably have videos that you can access through YouTube that would be able to explain this much better. I'm just hoping to supplement that with a slightly different slant. Superannuation is like a retirement savings where you deduct a percentage of your ongoing income, and you put it into your superannuation account, and then that accumulates over a period of time. And then by the time you reach your retirement age, you'll be able to access that and continue to maintain the lifestyle that you are currently enjoying, even when you don't have income from your employer coming through anymore. If I were to put that in the context of, say, this drink, if we were to imagine that this glass is your superannuation account, you would need to fill this up so that by the time you reach age 65, you've got enough money to spend post your employment stage. So if you just started work, you'll have very little to start off with. And that's where the regulators have actually questioned, is having insurance appropriate? Because the cost of that insurance is eroding the very little amount that you've got there so far if you've just started working. But I would argue that, for example, if you only have a little bit of contributions going into this, because it'll take you a good 50 years to fill this if you've started working at age 15, right? So if, say, you started at age 25 and then you've just still got a little bit of amount contributed in there, that's where insurance will actually come in very handy, because insurance will fill that gap. Because if you unfortunately died or hurt yourself before you were even able to get to that point, and you were robbed of the opportunity to fill this superannuation account, then insurance, if done properly, should fill that gap for you. So that's kind of the best metaphor I could come up with if I were to explain insurance to someone who doesn't deal with it on a daily basis. The types of insurance that you are likely to access within superannuation, there are 4 of them. There's death cover, there's terminal illness cover, there's total and permanent disablement cover, and income protection cover. There are others like trauma, for example, but they are not necessarily best accessed through superannuation. So death cover, for obvious reasons, is if you were to pass away, obviously the money is not going to be paid to you. It'll be paid to your loved ones or the person that you had nominated to get your money. I'm sorry, I'm just distracted by my phone. And terminal illness, you would normally automatically get terminal illness if you have death cover, and that is if you were unfortunately diagnosed with a terminal medical condition, then you will get that payout. And total and permanent disablement is if you were permanently unable to work again. You will get a payout if you meet all of the requirements of your insurance policy. And lastly, not everybody's got this, but ideally you'll get income protection within your super. Just make sure you don't get them from all over the place, because you're only ever going to get 75% of your income. If you've got 2 income protection policies, don't think that you can get a windfall by getting more than what you were originally earning, because they're all going to offset each other, and then in the end you're only going to get 75% of your salary. I think that's enough for now, but as I said, just to recap, insurance is something that would probably help you fill the gap in case you don't have sufficient monies in your account just yet. And that is, if you were hurt or if you died, then insurance is the bit that actually makes that difference. If you are not, and as I said, you know, what I'm trying to say is, if your account balance is actually a lot higher, and if you're older, the less insurance you need, obviously, because at that point you probably paid your mortgage, you don't have a car loan, you don't have a lot of credit cards, your kids might have left home already, and you're just really there to enjoy travel all around the world. So that would be the ideal arrangement. But yeah, so the older you are, the less insurance you need. The younger you are, I believe, the more insurance you do need. And the types of insurance is death, terminal illness, total and permanent disablement, and income protection cover. So that's it for now. I think we've got a whole lot to cover. Please leave me some comments in case you thought I didn't cover anything else that was relevant to these topics. And if you are someone I know or someone from the industry, be nice. I know that we're just all in this together, and feel free to also assist in answering any of the questions. Once again, these are my opinion. I am not giving advice. I am not a lawyer, not a financial advisor, just sharing some intel with all of you. Wait till we get to PDSs. I'd love to share with you how you can decipher your parts of your PDS to understand your insurance. All right, so happy Friday. Enjoy the rest of your weekend, and I hope to see you again in the next video. See ya.